last year, um, a really quiet, behind-the-scenes purchase order by Nvidia triggered this massive global supply shortage.
Oh, yeah. Completely upended things.
Right. And it sent a single component supplier stock soaring by, like an unbelievable 955%.
A literal fortune made overnight.
Exactly. And the crazy thing is, today, Nvidia is quietly deploying another $6 billion to do the exact same thing. And somehow, the broader market is looking the completely wrong way. So welcome to the deep dive.
Glad to be here.
For you listening, our mission today is to unpack a single, incredibly dense financial note that's tracking billions of dollars in these stealthy supply chain investments. We are going to decode the jargon, bypass the glossy CEO presentations, and figure out how to read the physical supply chain like a crystal ball.
Yeah, and the author of the text we're analyzing today is basically issuing a direct warning to anyone paying attention.
A warning.
Yeah, because the premise here is that technology isn't just software running in some abstract cloud. Tech is, at its core, physical material.
Right, it's tangible stuff.
Exactly. It's glass, it's silicon, and crucially for this deep dive, it is highly specialized lasers. So tracking where the money flows into those raw physical materials tells you what the future looks like before a single line of code is even written.
Okay, let's unpack this. Because before we can figure out the future, we really need to look at the money moving right now. $6 billion that is a massive amount of capital to deploy quietly.
It really is. It's huge.
We need to understand exactly where that money is landing.
Well, the source text gives us the specific breakdown of that $6 billion, and it is entirely earmarked for a category called optical technologies.
Just optical.
Yeah, specifically, Nvidia is actively funneling $2 billion into a company with the ticker COHR. Another $2 billion goes to LITE, and a final $2 billion goes to MRVL.
Wow, so it's evenly split.
Right, and this is not some, spray and pray venture capital approach where you fund 100 startups hoping one survives.
Just throwing money at the wall to see what sticks.
Exactly. It's not that at all. It is highly concentrated, targeted capital flowing into 3 specific downstream players in the optical space.
Okay, so imagine a world-renowned master chef going around the globe, quietly buying up all the premium, high-grade flour they can find.
I like that analogy.
Right. Like, they are just emptying the suppliers out. And they haven't announced a new revolutionary bakery chain yet. The menu isn't public, there are no commercials.
But you know something big is coming.
Exactly. By watching them buy all the flour, you know exactly what they are about to do. Nvidia is securing the ingredients before the menu is even public.
What's fascinating here is the specific nature of these deals, because the source text makes it very clear that these are not just casual equity investments.
They aren't just buying stock.
No, it's not like open market stock purchases where Nvidia just holds shares in a treasury. They're securing what are called multi-billion-dollar purchase commitments and future capacity rights.
Wait, future capacity right?
Yeah. Buying a future capacity right means you are not buying a product that exists on a shelf today. You are literally buying the factory's time.
Oh, wow.
You are legally reserving the physical output of that manufacturing plant for months or even years down the line.
So you're basically saying, whatever you build in this specific facility next year, it belongs to me. Nobody else can have it.
Exactly.
They're locking the door from the inside.
And in the world of semiconductor manufacturing, locking that door is a devastating move for competitors. I mean, these manufacturing plants, these foundries, they are not like a t-shirt factory.
You can't just spin one up.
Right, you can't just add a night shift or buy a few more sewing machines to meet demand. A modern semiconductor foundry is a multi-billion-dollar facility.
With the clean rooms and everything.
Oh yeah, clean rooms that are thousands of times more sterile than a hospital operating theater. The machines that etch these optical chips, they take months to process a single silicon wafer.
Months for one wafer.
Yeah. So when a company like Nvidia buys that future capacity, they are claiming the hardest to replicate real estate on the planet. If anyone else wants to build something similar, they are going to find a sold-out sign on the factory door for the next 2 years.
Which means Nvidia isn't spending $6 billion just to hoard components for fun. They are anticipating a massive shift.
Oh, absolutely.
And to understand the scale of what happens next, we have to look at last year's data to see the exact moment this strategy broke the global supply chain. because the source points out that Nvidia ran this identical playbook recently.
They did. Last year, NVIDIA realized the industry pushed toward a specific technology, what the text calls 800G and 1.6T pluggables, was going to completely exhaust the global supply of a component called an EML.
Okay, let's translate that out of the engineering textbook because, pluggable and EML sound like these really abstract concepts.
Alphabet soup, basically.
Exactly. But they are the literal physical bottlenecks of the AI revolution.
Right. Think about how computers traditionally communicate. They use copper wiring.
The old reliable.
Right. But sending massive amounts of data over copper is like trying to send a complex message by shouting down a long, incredibly crowded hallway.
It just gets lost in the noise.
Exactly. The signal degrades. It takes massive amounts of electrical power to push the signal through, and it generates a tremendous amount of heat.
Which is bad news for data centers.
Terrible news. When you are building an AI supercomputer, copper physically cannot handle the volume of data moving between the processors. The solution is LITE, lasers.
Okay, so that's where the EML comes in.
Yes, EML stands for electroabsorption modulated laser. Instead of shouting down a hallway, an EML is like sending that message via high-speed fiber optic Morse code.
So you can pack infinitely more data into the light, and it travels without generating all that heat.
Precisely.
But, and this is the kicker, only if you have the physical crystal to generate that specific frequency of light in the first place.
And those EML crystals are incredibly difficult to manufacture. So NVIDIA looked at their blueprints for their next generation of systems, they did the math, and realized there literally would not be enough EML components on planet Earth to satisfy their demands.
So they bought them all.
Pretty much. They approached LITE, COHR, and Sumitomo and pre-allocated the majority of global production.
Just bought the future capacity again.
Exactly. And the market reaction to this, once the reality of the supply squeeze actually set in, was violent. The source text highlights that LITE's share price skyrocketed by 955% following that major supply squeeze.
I mean, 955% is a portfolio-making number.
It really is.
But, I have to push back on the core premise of our source text here.
Okay, go for it.
If the market literally saw LITE go up 955% last year after NVIDIA did this, why does the author insist the market is missing the implications this time around?
That is the million-dollar question.
Because shouldn't every trader and analyst on Wall Street have alarms ringing right now if NVIDIA is deploying another $6 billion?
Well, you would think the market is this perfectly rational machine that learns instantly from its past.
But it's not.
Far from it. The author points out that we are seeing the beginning of the same playbook happen right now over the last month. But crucially, it is for a new architecture.
Meaning the specific components they need have fundamentally changed.
Yes.
The physical shape of the technology has evolved.
Exactly. And this is where market psychology creates blind spots. Investors get anchored to past winners.
They're looking in the rearview mirror.
Exactly. They are still obsessing over the 800G pluggables from last year. They see $6 billion going into optical tech, and they just assume, oh, NVIDIA is just buying more EMLs.
So they are fighting the last war.
If that's a great way to put it. The new architecture means the stress points in the supply chain are shifting to entirely new components, specifically what the text calls CW lasers and CPO.
Okay, so we need to break down what CPO actually is.
I do.
Because that shift in the physical architecture is what creates the new bottleneck for the listener to watch.
Right. So CPO stands for co-packaged optics. In the older architecture we just talked about, the lasers, the pluggables, were located at the edge of the circuit board.
Okay.
The processing chip had to send data across the board to the laser, which then shot it out as light. But co-packaged optics means they are now integrating the continuous wave lasers, or CW lasers, directly onto the silicon chip itself.
They are baking the laser right next to the brain of the computer.
Yes, right next to the processor.
Yeah.
And doing that saves a massive amount of power and drastically reduces the time it takes for data to travel.
But integrating a laser directly onto a silicon processor, I mean, that requires a completely different manufacturing process than building a standalone pluggable module, right?
Night and day difference. And that brings us to the fundamental difference between where NVIDIA puts its money and where the actual supply crunch happens.
The geography of the supply chain.
Exactly.
Here's where it gets really interesting, because NVIDIA prefers to invest in downstream players, but the actual supply crunch happens upstream. Think about it like the automotive industry. Imagine NVIDIA wants to buy thousands of cars. They go to the car dealership. That is the downstream player.
The one interacting with the end customer.
Exactly. NVIDIA walks in, slaps billions of dollars on the desk, and buys out all the cars. The dealership is thrilled. They just made a fortune.
A huge payday.
But the actual supply squeeze, the real existential panic is happening back at the steel mill. That is the upstream player.
Because they have to actually make the stuff.
Right. The steel mill suddenly gets an order for 10 times their normal capacity because the dealership needs to replace all those cars immediately. The dealership gets the initial cash, but the steel mill gets the bottleneck.
If we connect this to the bigger picture, looking upstream is the absolute key to spotting the hidden value the author is talking about.
So we need to watch the steel mills of the tech world.
Exactly. Supply chains act like a funnel. Downstream, where Nvidia is placing its $6 billion, is the wide end of the funnel.
Lots of room to move.
Right, they're pulling massive volume through the system. But upstream, the companies making the raw materials, the silicon wafers, the physical continuous wave lasers, that is the narrow end of the funnel.
Where everything gets jammed up.
Yep. When the wide end pulls massive volume, the narrow end chokes.
And it chokes because, as we established earlier with the foundries, you can't just spin up a new high-tech steel mill over the weekend.
You absolutely cannot.
It is bound by the laws of physics and, frankly, construction timelines.
When Nvidia locks down $2 billion with COHR or LITE downstream, those companies immediately turn around and frantically place orders upstream to fulfill that massive contract.
And that is where the pressure cooker explodes.
Exactly. And the source text gives us a literal map of this impending bottleneck, detailing exactly who sits at those upstream choke points.
Okay, let's map out that ripple effect. Instead of just reading off an alphabet soup of stock tickers, let's group these companies by their physical role in the real world.
That's a smart way to do it.
Starting with the raw light sources.
Well, the text notes that laser suppliers are currently on overdrive. We are looking at companies like MTSI, SIVE, LITE, COHR, Furukawa, and Sumitomo.
So these are the guys making the actual lasers.
Yes. These are the entities being pushed to their absolute manufacturing limits to provide the raw, continuous wave lasers required for the new co-packaged optics architecture.
The CPO we talked about.
Right. Without these specific, highly engineered crystals generating the exact right frequency of light, the entire multi-billion-dollar AI supercomputer simply cannot function.
It's just a very expensive paperweight.
Exactly.
Moving even further upstream, we hit the foundries, the physical factories doing the microscopic etching, and the source lists WinSemi, a company with the ticker TSEM and GFS.
The foundries are the ultimate narrow end of the funnel.
They're the absolute choke point.
Yes, they are baking the silicon and integrating those lasers, and their capacity is notoriously rigid. Building a new foundry takes 3 to 5 years and upwards of $10 billion.
$10 billion. Just to build one.
Just for one. If WinSemi or GFS is fully booked by downstream orders from Nvidia's partners, there is simply no way to squeeze more out of them. The global supply is capped by the physical reality of these incredibly complex factories.
And the source outlines how this ripple effect drags the entire surrounding supply chain into the slipstream. Like it calls out testing companies, specifically ticker AEHR.
Which makes perfect sense.
Right, because if you are manufacturing millions of new, highly complex co-packaged optical components, every single one of them has to be rigorously tested before it is deployed in a data center.
You can't just guess that they work.
Exactly. A failure in one laser can compromise a system worth millions.
The text even mentions substrates, calling out the ticker SOI, which involves the very foundational materials the chips are built on.
The very bottom of the funnel.
Yeah. And the author brings all of this to a very sharp point, stating clearly that the absolute biggest beneficiaries of this entire phenomenon are the segments from the foundries down to the ELS and CW laser choke points.
So that specific slice of the upstream market.
That is where the most value is going to be trapped, because that is where the manufacturing capacity is hardest to replicate. The moat there is incredibly deep.
So what does this all mean?
It's a lot to take in.
It is. For the listener trying to process the shift from copper to lasers, the new CPO architecture, and this massive mapping of the supply chain, how should they synthesize this into a single, cohesive takeaway?
I think the ultimate takeaway is that NVIDIA is not just a participant in the market. NVIDIA is the weather vane for the entire physical infrastructure of the tech industry.
They dictate the weather.
Exactly. We are currently sitting in what the author describes as a waiting period. The $6 billion has been committed downstream. The future capacity rights are signed.
The ink is dry.
The wave has been generated deep in the ocean, but it hasn't crashed onto the shore yet.
We are waiting for the inflection point. The moment when the broader market suddenly realizes the steel mill is completely out of steel.
Right, and the way you anticipate that wave before it breaks is by tracking those foundries and those laser choke points. You ignore the downstream headlines and look at the upstream suppliers who are quietly being pushed into overdrive to fulfill those promises.
Let's recap the journey we've taken through this research. We started by unpacking Nvidia's massive $6 billion downstream investments into optical companies.
The flour for the bakery.
Exactly. We established that these are multi-billion-dollar purchase commitments locking down future capacity rights, legally claiming the factory's time before the products even exist.
And then we looked at the historical precedent from last year, where Nvidia ran this exact playbook for pluggables.
Which resulted in a supply squeeze that sent LITE up 955%.
Right.
But we learned that the market is currently missing the setup because Nvidia is securing components for a brand new architecture co-packaged optics.
The market is fighting the last war, blind to the new bottlenecks shifting to CW lasers.
We uncovered the core dynamic. The true crunch lies upstream. Nvidia buys from the downstream dealership, but the panic happens at the upstream steel mill, hitting the rigid capacity of semiconductor foundries.
It always comes back to the physical constraints.
For you listening, the biggest takeaway is that you don't need a PhD in optical physics to see the future. You just need to understand the physical mechanics of supply and demand.
Follow the money, follow the materials.
When a giant like Nvidia moves, you don't look at the headline, you look at the shadow the headline casts on the upstream supply chain.
This raises an important question, something for everyone to really chew on as we wrap up.
Lay it on us.
If one single company, even one as massive as Nvidia, can completely exhaust the global supply of these critical optical components just by quietly pre-allocating production capacity,
Right.
What happens to all the other massive tech companies, the other trillion-dollar mega caps who are also trying to build out the future of AI?
The ones who didn't buy the flour.
Exactly. What happens when they suddenly wake up, look at their own blueprints, go to the upstream suppliers, and realize they are entirely locked out of the materials they need to survive?
That is the real consequence here. It's not just about who wins the supply. It's about who is left starving for it. We all want the future of technology to be a neat, visible roadmap handed to us on a stage.
But it's really not.
No, the truth is, the future is written in quiet upstream purchase orders for lasers and silicon. And if you aren't reading them, you might just find out that someone else has already bought the road you were planning to drive on